Hi, my name is John Dowdy, and I'd like to give you a quick review of the stock market for the weekend in September 6, 2013. During this week, the bull did return. We were positive every day after Labor Day, but we're still not out of the woods. The bull has yet to take out some key resistance up around the 50-day moving average, and that's what we'll be discussing in this video. If you'd like more data after viewing, please come to my website, www.superchargedretirementIncome.com. Let's take a look at the market. Before we start the analysis, let me say that this commentary is based on technical analysis, which is the analysis of charts. Does technical analysis work? Some people believe it does, some don't. If you'd like more data on why I believe it does work in some cases, then please come to my website. So there are several posts there, and all the posts are free. So here's the SPY, which is the ETF for the S&P 500. And I plotted that since about last November. And you can see we've been in the green uptrend channel. We broke it one time in May and then again in June. We have now broke below that uptrend channel over the last several weeks. On the chart, I've plotted three moving averages: the 50-day, the 100-day, and the 200-day. The 50-day moving average is in red, and the 100-day moving average is in black. And as you can see, over the last couple of weeks or so, we've been between the 50-day and the 100-day. The 100-day has proved to be some very good support for the market, and the market's having a hard time getting above the 50-day. Last week, we moved higher each day, and on Friday, we had a big bounce off the 100-day, moved a little bit above the 50-day, but could not hold it, and closed about 1 point below the 50-day moving average. 50-day is key. In order for the bull to become healthy, we have to move above that. If we do, the next resistance is filling this gap up around 168. This gap, the top of the gap is right at 169 also, which was the May high. So 169 is very important. And then if we do get above 169, then it's just a short sprint to 171 and to an all-time new high. If we can make an all-time new high, then the bull is obviously alive and well, and we could expect to go significantly higher over the next weeks and months. However, that's a tall order for the bull, as he has not been able to move above the 50-day moving average over the last couple of weeks. This has proved to be formidable resistance. If we cannot take out the moving average, then we will most likely bounce from the bottom of this moving average and move down to potentially the June low, which is 155.73. In between, there is a strong resistance point based on Fibonacci retracements, which I'll show you in the next chart. Okay, this is a chart zoomed in of the S&P 500, and as you can see, we have here the August high and the June low, and we've drawn the Fibonacci retracements between these 2 points. Right now, here we are, we bounced off the 50% retracement line, and this looks like a bear flag. This is a flag, bear flags is increases in the bear market. But we won't know unless we take out the bottom of this bear flag and move to a lower low. If we move to a lower low, then this will be a bear flag. However, if we move above the 50-day moving average, then we're back into bull territory. But what I wanted to show is the 61.8 Fibonacci level is at 161.5. If we do go lower next week, then this should offer support at 161.5. If we break that, then there is nothing but vacuum in between these two levels. So we would most likely, if we break 161.5, go all the way down to 155.7 before we hit strong support. We might actually bounce off the 200-day at 157. Also, the 200-day has moved up. So between 155 and 157, strong support down at this level. So we'll have to wait and see. The market is still inconclusive. So in summary, Yes, the bull has bounced back. The market was positive every day last week, but we don't know if we are making a bear flag or if this is the beginning of a new advance. To be a new advance, the bull must move above the 50-day moving average at 167. If we cannot take out the 50-day moving average and instead bounce lower, then we have support down at the Fibonacci levels, 161.5, and also down at the June low at 155. So we'll have to be watching that carefully. Next week, hopefully, we'll provide some clarity. Until then, I would advise caution. We just do not know which way the market is heading. So a quick legal disclaimer, the views I've been discussing are mine and mine alone. They should not be construed as any investment advice or an offer to buy or sell securities. Of course, you must make your own investment decisions. This is not investment advice that I'm giving you. Investments always involve risk of loss, and of course, also past performance does not indicate future profits. So good luck. Hope next week will provide us some clarity. Thanks for viewing, and as I've said, if you'd like more data, please come to my website, www.superchargedretirementIncome.com.